Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Now, Gabriel, it's always great to have you on the show this Friday.
Happy Friday.
Let's take a look at how markets are performing before coming back to you and getting your insights. We're going to start with cryptocurrencies, and Bitcoin is at 36,944. It's down, it actually up 0.35%. Ethereum is at 24,706. It's down 0.36%. Now over to regional stock markets now. We've got Bursa Malaysia, which is at 1,573.46. It's down 0.41%. SGX is at 3,162.89. It's up 0.01%. The Nikkei is at 28,986.55. It's up 0.1%. Shanghai Composite is at 3,601.82. It's down 0.25%. The Hang Seng is at 28,851. It's up 0.39%. ASX 200 is at 7,328.4. It's up 0.35%. Rounding off the numbers is the Kospi, which is at 3,243.46, up 0.58%. Gabriel, what do you make of the very mixed performance on Asian stock markets after that record close on Wall Street?
Well, a couple of things, Prime. I think if your viewers have been viewing in diligently, especially every Friday where I come on, you will notice that essentially that they would have made a lot of profits because 2 months ago at this period, when inflation as indicated by the CPI, the PCE, the core PCE, as well as actually the 10-year long bond yield hit a new high, we actually caution you that, as well as your viewers on your program, that, hey man, while the market's actually panicking, it's actually a normal cost of behavior for the 10-year long bond yield. And as long as it doesn't go up too fast, too quick, that may present the best buying opportunity. And since then, Brian, you can see that, our assertion has actually turned out to be true. I think the market timing has been prescient to this aspect. With respect to the other Asian markets reacting to Wall Street, you will notice that essentially the more highly beta, the more highly correlated markets like Singapore, Hong Kong to the US markets tend to actually perform slightly better than the rest when the US market is actually on the way up and of course commensurately on the way down.
And so essentially the consensus now in the US is that given that prices only jumped 5%, slightly higher than what was forecast, which is 4.7%, the view is now that inflation is temporary. But how about that view in Asian markets overall?
Well, I think essentially the people that actually became frightened because on two things. One is the fact that commodities prices like copper, were all suddenly skyrocketing, like iron ore prices, which we highlighted in your program again 1.5 months ago. But we did also caution that, look, those kind of huge quantum leap in jump, particularly, for example, like oil was negative last year. This year at this time now is $66. So how much more can it go? So realistically, see that quantum leap is a reflection of demand dynamics as well as the fact of supply constraints. But more so, there's also a what we call fear factor that's actually being incorporated. The second aspect that's been played out, and that's well played out, is the prices of cryptocurrencies, Bitcoin and Ethereum, which actually soared through. But then again, in the same program, we also did caution that as long as Bitcoin actually goes up to 60,000, it's actually derived of fundamentals. And we actually did tell you and did actually say on the program that it's something that is a reflection of sentiment, but not necessarily a store of value. So now that both have actually come off, I think that's actually easing off the inflationary fears.
Now, Gabriel, I want to bring the audience attention to something interesting that's happening in China. Now, Chinese REIT market has opened up since 31st of May with 9 IPOs on the Shanghai and Shenzhen stock exchanges. Now, the first batch of REITs are related to infrastructure and include everything from industrial parks, warehousing, logistics, waste management, sewage management, and highway tolls. Now, Gabriel, you're a REIT specialist. Give us some insights into this opening up of the China REIT market.
Right, Brian. I think you noticed that if you read my book, that's Making Your Millions in REITs, in all Asia Pacific bookstore as well as in China now, you notice that the last chapter was devoted on China REITs. And in that, since last year, we have mentioned that we expect the Chinese market to open up. It did, and it has come. We expect the Chinese market to be big, the REIT market. Now that's coming, angkat datang, so to speak, and the fact that the implications of Chinese REIT investors as a new class of investors, that impact on Asian Pacific REIT, I think that's something huge, something bursa that is likely to actually be happening for REIT investors in Singapore, as well as actually the rest of the Asia Pacific region. I think what's important is that this REITs actually will cultivate a few kind of investors. One is the yield chasing hungry investors. For example, the C REITs, they are being offered the 9, they are offering between 5 to 9%. Granted that actually there is actually some tax implications for foreign investors looking to invest in this C REITs, and until that's actually being sorted out, then we will not be able to attract a lot of foreign investors yet. But then again, take heart, because when the A share market started in the China, if you were actually deprived of that, that's fine. But if you look for ways to actually go into top names like Maotai, which actually has been the top performing Chinese stocks for the last decade, you have made your millions and really feeding chickens at home. See, so I see that happening in the C REIT market in China. They will start with infrastructure REITs, as what they have mentioned, tollway REITs, warehouses REIT in the beginning. But I think as it broaden out, it will be following similarly to what the US REIT classes actually offer, the likes of, for example, timber, the likes of lodging, the likes of apartment REITs. So essentially, REITs is the area for you to actually preserve your capital. It's actually a good substitute for bonds, and you're seeing not only just happening in Asia Pacific, you're seeing the opening and the essence of China's REITs coming and hitting the market in this big way.
Now, this initial 9 only offered very low supply, which is about 415 million Singapore dollars, or 2 billion renminbi. So relatively low supply for that number. They were 10 times oversubscribed. What is in the pipeline, Gabriel, in terms of REITs coming out? Do you have any idea?
Yes, because one of my good friend, that's actually Mr. Frank Gang, who is actually, he's the chairman of the China REIT Alliance. He was actually one of my panel of judges. I used to chair the Asian REITs Pinnacle Award. And he actually tells me that he sees infrastructure REITs and toll REITs, that will be at the forefront of the offering. There will be more of the same, but different, coming from different provinces. For example, you have the tier 1 cities like Beijing, Shanghai, Guangzhou, Shenzhen offering. Then you have the second tier 1s, for example, Dalian, Guangxi, coming up. And then maybe in time to come, the third tier cities, for example, like Changchun, Shenyang, all this will be jumping on the bandwagon. And sooner or later, the classes of REITs, will broaden from toll roads, warehouses, infrastructure to even greater other sectors, for example, like solar panel. So that is something that is probably going to happen. That's why that's going to be very exciting.
Now, is that going to have then an impact on the Singapore Stock Exchange in particular? Because that is, for Southeast Asia and Asia Pac, in fact, REIT central. I mean, people look to list their REITs in Singapore because of the visibility and also the access to institutional shareholders.
Yes, I think the experience of both Singapore and the US market is actually something that is instructive for investors like ours. I think it's quite clear that from the US experience and the Singapore experience is that first you have a broadening of asset classes, you have a broadening and deepening of the kind of investors. So for example, we take Singapore, for example, in the last 1 year, there are like 200 family offices that's actually being set up here. While no figures are actually stated clearly as yet as to how many of them will specialize on REITs, but having quite a number of these family offices, the Sions that will take over the next business in my GCP Global classes, where we actually teach every quarterly, The feedback is that essentially they are looking for good high yield kind of instruments, and REITs fits into this category nicely. More so because they are being seen as a good substitute for bonds. That will develop. Of course, the great money is actually in the likes of tech stocks. Up and coming tech stocks that will actually boom, that will actually cater to the latest trend in the market. But as any good investors, you always make sure that we have certain diversified port that we put in a good fixed income kind of assets that will actually withstand market volatility, be better than a common stock.
Now, Gabriel, thank you very much for your insights.
Thanks, Brian.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please like and subscribe our LinkedIn and Facebook pages. Thanks a lot for tuning in.